Hey guys, what is going on? Welcome back to my Robinhood portfolio. As always, hope you guys had an awesome day trading today. You can see my portfolio up top, unfortunately in the red, down $161.43 during regular trading hours, 0.54%. You can see the ticker up there has changed a bit. We're in active after hours trading right now, down a little bit more, $12.13, 0.04%. Overall, the three major indices were mixed today. S&P 500 was down 0.11%, Nasdaq was down 0.59%, but the Dow 30 was up almost 40 points, 0.20%. As I scroll through my portfolio, you can see kind of a mixed picture here. A few stocks in the green, a few stocks in the red. Overall, lost a little bit of money today, but not as bad as I was anticipating. I thought the markets would pull back a little bit today. Actually missed a trade on Ford that I was going to pull off today. I was going to go ahead and sell off about 200 or so shares up at $13 or so. I was going to put in a limit order. Unfortunately, this morning I got busy, was not able to do that, and by the time I got back, I was already down to the 1280 range or so. So I just kind of held on, and it ended up, trending down a bit here, 2.66%. So a few dollars were lost today. Missed that trade, a little bit unfortunate with that, but I'm still up quite a bit on my Ford play here. You can see still up $430. Like I said, I lost a few dollars, $259, but still up, and I've done quite a few day trades and swing trades on Ford. Made quite a bit of money, so not too bummed about that. What I would like to do today is talk a little bit about how to sell stocks on Robinhood. A lot of you guys have been asking how that's done and what the difference between the different orders are in Robinhood. A few months ago, I put out a video how to buy stocks. There's 4 different options to buy stocks, and likewise, there's 4 different options to sell stocks. So I thought I'd go through it and at least briefly talk about each of the 4 different sell options and what the important differences are between those different options, especially for traders who aren't necessarily able to get into Robinhood throughout the trading day. And it's important that we put in orders, either limit orders if a stock's going up to sell, and or stop loss orders. So if stock does start tanking and you aren't basically able to get into Robinhood to sell that, we have a standing order to sell that off before it drops too much. So having said that, I think we'll go ahead and take a look at DRYS here. This is a stock that I think can kind of demonstrate the power of these particular orders. So this stock, as you guys know, basically a penny stock that a lot of investors started doing some gambling on, a speculative play here, rising, as you can see here, $4 or $5 range, $6 range to $73 at one point, and then quickly bouncing back down to the $3, $4, $5 range again. So I think this stock is perfect to demonstrate the 4 different sell options. So if we go back to the day view here, so actually I can't do that because I don't have any stock to sell. So unfortunately, bad example there. Let's go to a stock that has some movement in it to kind of show the differences here. Let's go down to, I think Wells Fargo would be a good stock here. I think there's been some movement in Wells Fargo. Not as good as that DRYS, but I think this is going to prove my point here. So if we go to sell, you'll notice that there are 4 different order types in the top right here: market limit, stop loss, and stop limit. So if we go to market order, this is simply going to sell the stock for whatever the price is. So if I were to put in a share and put execute here, this would simply sell the stock for whatever the price is, whether that's $55.67, whether that's $50, whether that's $60. So it'll go ahead and sell that whenever the next trading session is active. And if we were in a trading session, it'd simply go ahead and sell the stock right off the bat. If we start over again and do market order types and we do a limit order, this is going to specify the minimum amount you're willing to pay, essentially. So if the stock is $55.67, you'd want to put in something like $60, or you would want to put in $65. So unless the stock hits that price, you won't sell the stock. And some of you may be wondering, well, why can't you put in $54? Well, you can put in $54, but then essentially it's a market order unless the stock's moving very quickly. If the stock was dropping $55 to $30 in a couple minutes, it might not trigger this limit price, and then the stock would basically have to climb back up to $54 to execute that price. But If you were to put in a price lower than this, it simply would be a market order. You'd go ahead and sell that right off the bat. So this is essentially if you're watching a stock climb up and want to sell that stock, trying to time a peak, if you will. Kind of that strategy of buying the dip, selling the rally. This would be a great way of doing that. And you wouldn't have to be in front of the computer or in front of your smartphone here in Robinhood to go ahead and execute that trade at the price you wanted. Simply put this in the beginning of the day, and you can either stop that today at 3 p.m. You could go until 5 p.m. tomorrow, or it never expires. Either way, you would put that order in. So you'd always be sure that if that stock did hit that price, you would be able to sell that off. Another type of order is a stop loss order. So this is very important because, as we talked about, you can do a market order. It sells right where the price is at, no matter if it's going up or down. A limit order, that only sells if it's going up to a specified price. Like I said, you could put it in for less, but it simply is identical to a market order. This basically is saying that you don't want to have a stock, or you don't want to hold on to a stock if it drops below a certain price. So again, this is for investors who may not be able to access the markets. Let's say, for example, you put a stop loss in at $40. Well, if this stock were to trend down to $40, you'd basically trigger a market order, and then that stock would be sold for whatever the market price is. So if a stock was trending down pretty gradually, you'd sell this stock for $40. If it was tanking and going down $50 to $20 within a few minutes, this may be a $35 buy. You wouldn't have control over that. Simply, you would have an order placed anytime it got less than 40. So if you were able to get that stock sold at 40, you'd do that. But if it was dropping quickly and/or there weren't a lot of people buying and selling, you may have to buy at 35. You would have no control essentially over that price. So that's a way of limiting your losses. A more sophisticated way of doing that is a stop limit price. So same scenario, you want to go ahead and sell for $40, but the stock is dropping very rapidly from like $50 to $30, and you weren't able to execute that price at $40. Well, on this particular order, stop price, you would not sell that. The stock may drop from 50 to 40. You would sell it at 40, no problem. If there's a lot of buyers and sellers, and if the stock is dropping pretty predictably. But if the stock were to tank and drop from 50 to 30, you would not buy at $30, because once you got below 40, the stop limit order would be placed. So until that stock trended back up to 40, you would not sell that particular stock. So I hope that made sense. I went through that pretty quickly. So let's kind of go back to the graph to kind of show you guys exactly what I mean by these different types of order sets. So let's go ahead and take a view at the 1 year view. I think this would be a great view. So if you put a market price in, you would basically buy for whatever that was. So if you put a market price in here, you'd buy for $46.62. If you put it in here, $44.97. If you put it in here, $44.13. It would simply sell your stock for whatever that price is. If you put a limit in, let's say the stock was trading here, and you put a limit in for $52, for example. Well, you would not buy at any of these prices along this on the graph here. You would only buy once it got up to $52. So you'd buy here, $52.12. The price would be executed. If this was moving pretty predictably, you'd buy right at $52. If this is moving quickly, you may buy at $53.58, for example, or excuse me, you may sell at $53.58. Sorry, replace all those buys with sells here. So market sell, you'd be selling here, here, here for whatever the price is. Limit sell, you would not sell until you got to your limit price, which I said before was 52. So if you put a limit price at 52, you would not sell there, you would not sell there, you would not sell there. Even here you would not sell. You would only sell if it got up to that $52 mark. Like I said, if it was moving pretty slowly, you would basically sell right at $52. If it was moving really, really quickly, you may sell at $53.58 or so. So that's where the other two limit orders come into play. So if you put a stop loss order in, let's say your stop loss is $45. So you could basically put that order in, and then you would not sell until it got down to $45. So you would not buy, you would not sell here. Excuse me, I keep saying buy. You would not sell here. You would sell here. So you would sell at $44.97 or so. Again, if this was moving pretty slowly and predictably, you'd sell right at your sell price. If not, you may sell for a lot less. So that's where the stop limit comes in. So for example, let's say this drop off right here, for example, it goes from 50 to 43 very quickly. Let's say you put your stop loss at 46. Well, sometimes it may drop so quickly you won't be able to execute it at that price because there's just not enough buyers and sellers at that price. You may have to execute it here at 44. So if the stock drops very, very quickly, even though you put a stop loss in here, you'll buy it here. So that's when you go ahead and put that stop limit order in. So let's say you put that same limit order in at 45 again. If it moved really quickly, went down to here very quickly, you still wouldn't sell until that got back up to 45, and then you would sell. If that makes sense. So again, those are the 4 different order types here: market, limit, stop loss, and stop limit, with the real nuance in the selling order types between the stop loss and stop limit. So stop loss, you simply sell your stock anytime it gets below a particular number. Stop limit, your order becomes a limit order. So if it's moving quickly, it won't sell until that limit comes back around. So it's kind of like this limit order up here. So 4 different sell options in Robinhood: market, limit, stop loss, and stop limit. Typically, I do a lot of limit orders for my buy to dip, sell the rally kind of trading strategy. I've never really put in any stop loss orders. I only buy stocks that I'm comfortable holding for the long term. So if I can't get out of a day or swing trade, I simply hold that stock for the long haul. Same thing with stop limit here. I haven't really been using the stop loss or stop limit orders, because like I said, I buy stocks that if I can't get out of quickly, I'm more than willing to hold those long term. But some of you who buy a little bit more volatile stocks may want to put these in play. So if you're away from your computer, if you're away from your smartphone, actually, since I'm talking about Robinhood, if you're away from your smartphone, you don't lose a lot of money because you weren't necessarily able to trade when that stock was tanking. So I hope I made that clear by not only talking about them in the limit drop-down menu, but also on the graph here. So 4 different ways of selling stocks. And just to quickly go back, I would never recommend selling at the market price here, unless there's a price you knew for certain you wanted to sell at. I would never do that because Robinhood isn't really updated timely like a lot of the online brokerage accounts are. There may be anywhere from a 30-second to a couple minute lag on a price of a stock. So even though you may be, like, for example, selling here at 49.38, you put that in as a market order, it may sell at 46 because of the delay. And sometimes stocks can move pretty rapidly in a very short amount of time. I have this on the 1-year view, but this could be a 5-minute view here, and stocks do drop this quickly. So I would never do the market order. I'd always put a limit order in. And even if, for example, it was 50.13, for example, just put it in a limit order at 50. And you may sell at 50.10 or 50.12, but at least you will never sell below that. So that's what I do in Robinhood. So I hope I made that clear, talking about it in a few different ways. Hopefully I didn't go through that too quickly. I know I have a tendency to do that at times, so if I did that, I apologize. So yeah, let me know what you guys do with your day trades and swing trades on Robinhood here with the different order types. Like I said, I use a limit order quite a bit. Never really use market order or the stop loss or stop limit order on a frequent basis. I've used it a couple times, but not a lot. So yeah, that's kind of what I wanted to talk about with this video here, how to sell stocks on Robinhood. If I made any mistakes, let me know. If I went through that too quickly, let me know, and I may put out a video maybe going through these a little bit more in depth. So yeah, with that, I'll kind of end the video here. As always, if you enjoy my videos, feel free to like, share, and subscribe if you're so inclined. As you guys know, I'm a new investor. I'm learning about the markets, having a ton of fun posting videos and learning while I trade, and your advice really helps out with that. So if you